everyone, welcome to Moneysense, the show where we help you to make sense of all things money. I am your host, Mandie Powell, and joining me online is John Sinclair, CEO of Credit Info Jamaica. Hi, John.
It's a pleasure to join you on the show today, where we get the opportunity to discuss the role of the credit bureau, what's a credit report, and how the credit score can impact your financial journey.
Before we commence our discussion, please ensure you check out our previous episode where we spoke about debt management and how we can effectively and in a practical way deal with our debt. So, John, can you tell me what a credit report is and what information can we find on the report?
Okay, so think about a credit report like a report card on how you manage your finances. It shows how you pay your loan obligations with one or multiple institutions. And what is usually on a credit report would be your personal information, your credit history, your credit score, your payment history, and a number of inquiries that you would have on your report, which is basically when an institution checks your credit score on some period or some periodical basis.
Okay, I see. So, John, where do you pull this information? Because it says it's like a report card. So my date of birth would be on the report. My name will be there. My TRN. Where do you pull that information from?
Okay, so that's a very good question, because I think a lot of persons need to understand where the bureau gets their information from. So we are just a custodian of data. All the information that we get comes from all the financial institutions that provide information to the bureau. These institutions are microfinance institutions, banks, credit unions, hire purchase institutions, utility companies, insurance companies, etc. And during your onboarding process with these institutions, you provide them with personal information, which we collect and then put on the credit report.
So, viewers, I hope that you are listening keenly to the information that John just shared with us about the data you can find on your credit reports. So, John, ever so often we hear persons talking about having a good credit score. What really is a credit score? And how do we build our credit scores?
All right, Mandy. So with all the information that I mentioned before, we collect all that data, and then we create what is a 3-digit number, which is what we call a credit score. And a credit score really depicts a customer's willingness to pay on their loan obligations. So institutions will use a credit score. A good credit score is between 600 to 900. But first, let me go back. The credit score is from a range of 250 to 900. But a good credit score is between 600 to 900. And what institutions do is they use this credit score to determine how a customer will repay their loan obligations with an institution.
Okay, so you're saying, John, that the farther down I am in terms of number, so if I'm at 350, I am considered a risky borrower?
That is right. You'll be considered a high risk borrower. And as such, institutions might not want to lend to you, and if they do, they might have very strict terms with the contract that you'd be going into for the loan.
Okay, and if I have a higher score, so in the 700, 800, I will be considered a good person to give credit to.
Right, because that would mean that you're low risk, and there's a benefit to having a good credit score. A good credit score allows customers to negotiate terms on contracts. What this means is that, because a good credit score makes you attractive to a lender, this means that you can negotiate the terms of the loan, you can negotiate the deposit percentage, you can even negotiate the interest rate at some point in time. So having a good credit score is important because it allows you to reach some of your financial goals.
Wow. Viewers, I hope that you did not miss out on that information, I hope you did not miss out on it. John, I want to ask you a question. Say for instance, a regular person selling back juice on the street. No, don't underestimate this person. This person aspires to start manufacturing and distributing back juice very soon, right? But this person has no credit because they have never done business anywhere before. How can such a person start building their score? So when they approach a financial institution, they will say, hey, you have some amount of credit and I would like to assist you.
That's a really good question. So there are multiple ways to build credit in Jamaica, but one of the most common ways we're seeing now is where you just apply for a credit card. The restrictions and the requirements to obtain a credit card are not as strict as an unsecured loan or a loan, and therefore it is usually the first point that customers can start to build a credit. So this back juice person could apply for a credit card, start to pay their credit card payments on a monthly basis on time, not pay just the minimum payment, but the total amount. And over time, this information will be shared with the bureau, and as such, that person would have credit history and, of course, a score.
John, I know you mentioned a few pointers of maintaining a good credit history, but what are some of the other ways in which we can maintain such?
The main way of doing it is really to pay your obligations on time and within the agreed amount. The second way is in the event that you have negative payment history, which means that you have some missed payments, always good to pay your arrears and then start to pay on time. So pay off those arrears, pay on time. Sometimes the arrears have gone really bad over a certain period. And what we recommend is that you meet with the institution and you work out a payment plan for them to allow you to pay back on those outstanding dues, and as such get yourself into some type of positive payment. If you do have revolving credit or a credit card, we ask that one, you don't max them out. Maxing out a credit card is not seen as something very good. So we ask that you don't max out your credit card. However, you do not pay just the minimum payment. You pay what you use. And this, of course, would mean that when the information is reported to the bureau on a monthly basis, you are clearing your credit card every single month. These type of things will allow you not just to build up your credit score, but also maintain a credit score over a period. And what we recommend customers do, which is very important, is that you check your credit report regularly. You get one free credit report per year. Sometimes the institutions might not report all the accurate data, and this inaccurate data can negatively affect your credit score. So it's always good to check it. And in the event that you find a discrepancy, the bureau will assist you in getting these things resolved.
So just to pick up on the last point, so you're saying that if you do a credit check and you find out that there's some discrepancies with what the credit bureau has and what an institution has, that the client can actually lodge a dispute or make a dispute case for same to be resolved. And based on that, if it is actually legal or the institution is at fault, once that is clear, that can actually build up back the client's credit score?
That is correct. So the idea is that, and based on law, it takes 14 days maximum for these things to resolve. That is between the bureau, the institution, and the customer. But usually, if there's something negative on your report, and you mentioned a very key word there, you lodge a dispute, we will work with you. We will contact the institution. We will put the case together. They will respond to us and tell us that, okay, the Mandie does not have anything outstanding. And what we would do, we'd make the corrections in the data and a new credit score would be produced, and that will also be shared with the institution.
Wow, that sounds really good. So viewers, if you have a dispute, if the information that you're getting from your financial institution, you think it's not correct, or you strongly believe it's not correct, do not hesitate. Please ensure that you check with Credit Bureau to ensure that you can get the issue resolved so it does not affect your credit score negatively. John, I have another question that I would like to ask you. When you think about tertiary students who just leave school, many students take students loan. And oh boy, I tell you, sometimes when you're finished, you don't get a job immediately. And what you find out is that you're not able many times to make the minimum installments, or to make the minimum installments. And so you find that when you approach an institution to whether get a car loan or just get a personal loan, you see that you have student loan there. How can that tertiary student build their credit? I mean, sometimes it's, say for instance, again, they're outstanding 6 months, a year. They're making payment, but it's just the minimum. How would you encourage such a person to try to remedy this so they can build back their score, so they can have a good credit score at the bureau?
Well, on the bureau side, we can only look at what the trends are in the market and make some recommendations or provide an opinion. But what our recommendation is that you work with the student loan bureau to either extend your package, which would reduce the amount to something that you can afford. It might extend the tenure of the loan, but at least now you're not just paying the minimum payments, you're paying your new obligations. Those new obligations will come into the bureau as positive payments, and as such start to build back your score. And as I had mentioned before, a lot of the times when you get your first job as a student, it's going to be difficult for you to get an auto loan or a mortgage, because they're going to need some credit history on you. But it will be a little easier for you to get a credit card. And if, as a young person, if you can manage a credit card well, pay not just the minimum payment, but pay whatever you use, and have that information reported to the bureau along with the adjustment to the student loan bureau payments, then that should allow you positive data, which then in the near future you can apply for a loan to get something that would advance your life, like a mortgage or a car, or to help to build a business. Who knows?
Okay, so you're saying if a student or just any other person who has a loan who is past due, what you can do is to reach out to your financial institution for them to assist you in restructuring that debt that you have, right? So restructuring of debt is very, very important, and it helps a long way to build back your credit. You hear that, viewers? You get that information nowhere else but on Moneysense. The other thing I want to talk to you about, John, is sometimes I find that customers will go to financial institutions, and man, they sometimes have credit cards and loans for long periods. They get amnesty to pay these cards, and they pay them off, whether loan or credit card. However, they find out that after years, when they approach other institutions, they're telling them, oh, you have this card, oh, you have this loan. How do you deal with such a situation at the bureau? And how often do these institutions, provide you with data for clients?
All right, so let me answer the last question first, because it's important to know that we receive data from most of our financial institutions on a monthly basis. So every end of month, when they close their books and the balances, they would then provide us with data to show how the customers are performing on the obligations in the system. Now, the other part of the question, as it relates to amnesties and MOU, moratoriums, etc. The bureau, we have your credit history for an extended period of time, around 7 years per contract or per loan. So in the event that you had an amnesty 2 years ago, you remember that you were not paying on your obligations for a couple months, and then now you would have negotiated some amnesty. We would have on our credit report the missed or the negative payments, and then we'd show that credit card or that loan was then paid off, or there was some arrangement made to clear the loan. However, we do still keep the fact that for the last 3 months or 6 months, there was some negative data on your loan obligations with the financial institutions about the missed payments. So yes, a lot of customers come to us and say, I worked out something with Kris and Charles, and I had paid it off, but yes, 6 months prior to that, you were not paying on your obligations, and this information was reported to the Bureau, and we do have it on the report. It allows other financial institutions to look at your behavior to determine what type of loan or what type of facility they want to afford to you in the future.
Okay, so you're saying that, John, after 7 years, that this information will still be there?
Yes. So we keep the information for 7 years. So when after you close that loan or whatever the case is, the information will stay on our report for 7 years. After that, it ages off, and that is by law.
Okay, wonderful, wonderful. So at that point in time now, I will be able to actually repair my credit. I'll actually able to increase my credit score.
Well, technically, yes and no. So depending on the length in time that the loan is in the system, it is not as important as your most current loans. So the older the loans are, and they will age off, is the less percentage or the weighting it has on your credit score. But remember that you don't need to wait until you close that loan to start to build your credit. You have every opportunity every single month to make an adjustment and build up your credit score.
John, I'm sure this is a question many of my viewers would want to get a response to. I'm a person, when I take loans, I do not like to have them for long periods. I just can't bother with all of that debt, right? So if I take out a loan that is to be repaid within 3 years and I pay that loan within a year, how does that affect my credit score?
All right, so technically, Mandie, it doesn't affect your credit score in a negative way. But what happens is that the more credit history we have or payment history we have on an individual, is the better it is for us to determine your behavior. So having credit history for 3 years, especially if it is very positive, would give you a better impact on your credit score than just 1 year. So paying off your loan early, might mean that we wouldn't have enough credit information or payment information to give you a holistic score on your behavior. So sometimes it's not recommended to pay off your loans too early. So, if you have a mortgage that's 30 years and you pay it off in 25, then that's fine. That's 25 years worth of history. But if you have a car loan that is for 3 years and you pay it off in 6 months, then we only have 6 months worth of positive data for you. And as such, we can't use all that data now, to give you an accurate credit score.
Okay. So you're basically saying then, if I have a loan, allow it to run for a period of time, like probably 3/4 of the duration that I get to repay this.
Right. It's usually good to have credit history over 2 years or 3 years. So just paying it off early is good for you financially, because now you don't have any obligations. But at the same time, when you do go to another institution, we won't have enough history on an individual to give an accurate score. So that's the only negative part of it, but it doesn't negatively affect your credit score.
Okay, so on average, 2 to 3 years is good.
Of data.
Of data, right.
Historical data. So if you have a credit card and you have a car loan and a mortgage, then these things do generate history. But not to clear off all the loans in 1 year and then you're going back for another loan, 2 years from now, we wouldn't have enough history on you. So you might fall into a bucket where the institution might require additional information because they can't find enough credit information to determine your behavior.
Here are some tips on how to improve your credit score.
A riveting discussion with John Sinclair from Credit Info. Thank you so much, John, for joining me on another episode of Moneysense, where we spoke about the impact of having a good credit report.
Okay, Mandie, thank you very much for allowing me to share the stage with you today whilst we were discussing the impact on credit history, your credit reports, and ways to improve it. To all the viewers, I want to make mention at the fact that you are entitled to one free credit report per calendar year. You can visit our website at jm.creditinfo.com, or you can call us at 876-663-7023. Once you visit our website, click on free report. A report will be sent to you in 24 hours. Please view your report before you start any of your financial journeys to ensure that if there are any discrepancies, you can have them corrected.
Please ensure that you check out our next episode where we will talk about insurance and its impact on wealth. Insurance, wealth. Please ensure you check it out.